Hello traders, you're welcome to this video. In this particular video, we are going to be discussing the best RSI indicator settings for more accurate trades. Guys, we're going to be discussing that in this video in order to enhance your trading accuracy. So now, first of all, we need to explore the RSI. How does it work? What does it indicate and all of that? We need to break it down into steps, okay, just quick steps, right? Now, the RSI usually have a default settings of 14 period. The default setting is 14 period, okay? Now, I'm just going to remove this one that was here before. Let me just remove both indicators so that I can explain everything afresh. So now when you want to add your RSI, come to oscillators, RSI, the default setting is 14 period, right? And then it measures on a scale of 0 to 100. It measures on a scale of 0 to 100. And the key levels that most traders usually look out for are above 70, which indicates an overbought level, or potential reversal, because this overbought level indicates that there could be a potential reversal of price downwards. And the second point that most traders usually look out for is below 30, which is the oversold zone, and it usually indicates that there could be a potential reversal of price up, right? Now, you might be wondering what is going to be the best settings for your RSI. Now, if you want to know that, you might want to stick around as I explore that next. You might want to stick around till the end of this video so that you won't miss out on anything that I will be sharing, right? Okay, now the period that you set for your RSI, it actually determines its sensitivity to price movements. Shorter periods make the RSI more volatile, while longer periods smooth out the indicator. Now, for example, we're going to do a very simple experiment right now. The default settings is 14, and you can see how the RSI was moving, right? Now, if we are to increase this value to 50, it's going to smooth out the indicator. As we can see, it's smoothing out the indicator. So the higher the period, the lesser the volatility of the RSI. Basically, that is how it works. So if you are a scalper, if you are a short-term trader, you might want to focus on perhaps 7 period or 9 period instead of 14. This makes the RSI more responsive and can help you to catch quick price changes and momentum shifts. So in a fast-moving markets like Forex, and perhaps if you are trading something like the gold that is volatile, you might catch a lot of small price movements. Perhaps you can focus on the 5 minutes time frame or 15 minutes or even the 1 minute time frame using the 7 period RSI. And looking at these examples now, we can see how the RSI was quickly responding to price changes. So you can literally be riding the price from down to up, from oversold to overbought and back to oversold and back to overbought and back to oversold, like that, catching a lot of price movements. As we can see, as the market was ranging, you would have been trading from up to down and back to up and down and up and down, like that, if you are a scalper, right? Now, for medium trading, like medium-term trading, like swing trading, if you are a scalper, you can focus on 5 minutes, 15 minutes, 1 minute, but a day trader can use the same 7 period or 9 period, but on a higher time frame, probably like 1 hour, probably like on a 1 hour, 30 minutes time frame. If you are a day trader, right, you can use the same settings, but on a higher time frame. But if you are a swing trader, then you might want to stick with the 14 period, right? the 14 period can give you that flexibility or that volatility that you are looking for, right? So you can have your trades running for days and you will still be able to catch good moves. And you might want to also focus on higher time frames, right? If you are a swing trader. So we can see that when the RSI was in the overbought region and as it began to cross downward, you can see that price responded to it as well. And you would have considered entering your sell trade just right after the RSI dipped below the 70 level, and you can set your stop loss above the swing high. And as for take profit, you might want to wait until the RSI gets toward the oversold zone. Okay, so would have considered exiting somewhere around here. That would have fetched us about 4,300 pips. Okay, now for long-term trading or position trading, you might want to consider 21 period or between 21 to 28. Perhaps you can consider 21 or you can consider 28. Let's just change this to 28 and also see. You can also consider 28, and you might want to focus on the daily time frame. If you are a position trader, perhaps you want to hold trade for months, right? You might want to focus on the daily time frame and use the 28 period, right? The 28 period RSI, because this one is more appropriate for longer term traders. It provides a smoother line, as we can see, compared to the more volatile lines of the lower periods, and it is better suited for long-term trend. It's better suited for long-term trend, helping traders to avoid whipsaws in volatile markets. Now, to optimize your RSI further, you might want to use 80 for overbought level. You can just decide to change this setting. You can come to levels. When you come to levels, you can decide to change this to 80, right? You can change this to 80 so that you can have a stronger signal for oversold or for overbought. Sorry, you can have a stronger signal for overbought. So you wanna increase the threshold. Use 80 for overbought and 20 for oversold in strong trending markets. So this can help avoid premature entries and exits in high momentum environments. So you can just change that. You can see. Let us change this back to the default 14. So you can see now that it's going to give you higher probability, higher probability for your trades. Like the threshold now is an 80, and whenever RSI enters that 80 level, you can know that the oversold is the overbought indication is stronger compared to when it was at 70, right? So you will know that the overbought indication is stronger compared to when it was at 70. And as for this, compared to when it was at 30, you will know that the oversold indication is stronger, right? Now, it has in a strong trending market. Yeah, when the market is trending strongly, you might want to change your settings to 20 and 80. However, you might want to change the thresholds to 60 and 40. For example, now we can see that this was a strong trending market, right? So this 20 and 80 would have applied in this scenario. You can see that if we had entered a buy from here, you can see that the price bought a long time, right from October 2022, though this is the daily time frame. Up to this point, it is still buying. And although we could have considered selling or exiting our buy trade around here when the price entered the overbought of 80. So that would have been somewhere around here. But we would have caught about 34 or 35,000 points, which is about 3,500 pips. This was about 3,500 pips, right? Although this would have been holding it for months. This would have been holding the trade for months. Meanwhile, in a range-bound market, you might want to consider, let us look for a range-bound market. Let's go to the smaller time frame. Let's look for a range-bound period. You might want to consider changing the settings to the levels to Let's just change it to 40 and 60. You might want to change it to 40 and 60. That is for a range bound market. Yeah, the essence of this is that you can be able to more effectively trade the range. More effectively trade the range. You can see this is a range bound market. So we can see that when the price entered the overbought, you can just quickly sell. You can just quickly sell, right? And then you wait for it to enter the oversold, and then you exit your sell trade and enter a buy trade, and you wait for it to enter the overbought, and you exit your buy trade and you enter a sell trade, and you wait for it to enter the oversold, and you exit your sell trade and enter a buy trade. You can see, so the 40-60 levels are going to work for range bound markets. You can be able to capture more movements with the 40-60 level. Meanwhile, you can also combine the RSI with other indicators. You can decide to use moving averages in addition to the RSI. Maybe we can use like the 200, depending on the kind of trader you are though. If you are a swing trader, you might consider 200. If you are a day trader or a scalper, you can consider 50. So let's just use 50. Okay. So now while waiting for, let us just go back to a trending market. Okay. Now let us change this back to, let's change this back, since this is a trending market, so let's just change it back to 20 and 80, right? Okay, so now when you get an indication from the RSI to sell, for example, you can use the moving average as extra confirmation. You can use that as extra confirmation. Now we can see that when the RSI gave an overbought signal, you might have considered selling at this point. But if you wanted to wait for extra confirmation, you might just wait for the price to dip below the moving average and then you sell. And then you wait for price, then you wait for the RSI to either get close to the oversold or to enter the oversold or get very close to it and then begin to point back upwards. Then you can now exit your sell trade. So the moving average can just serve as extra confirmation. You can also change the moving average settings. If you are an intraday trader, you might want to consider a smaller period for the moving average, right? Yeah, you might want to consider a smaller period. In fact, I'm going to recommend that whatever period you are using for the RSI, if you are using the moving average for confirmation, you might want to use that same period, okay? I want to use that same period, right? So now we can see that once the RSI gave you a signal, it was not long later before the moving average confirmed the signal. So the RSI gave a sell signal here. Just shortly afterwards, you can see that the moving average also confirmed it because the price dropped below the moving average. And now for buy signals, we can just see different examples. This was a buy signal. We can see as price crossed, as the RSI began to point upwards very close to the oversold region, we can see that the price of the asset also caught above. It's also caught above the moving average. So that was like a confirmation. It was a confirmation signal. And you can also use other indicators such as the MACD, the moving average convergence divergence. You can also use stochastic oscillators to confirm. Yeah, you can also use those other indicators to confirm the signals you get from the RSI. And of course, you might also not want to forget trend lines, dynamic support and resistance levels, and even your horizontal support and resistance levels. All these can serve to further enhance your strategy. You know, the use of support and resistance levels, right? They can further help. Okay, so when the RSI gives you a buy signal, for example, you can see that this buy signal coincided with a support level, and then you might have entered a buy trade and then waited for price to get to the resistance and then exited your trade. Or you can wait for the RSI to give you a sell signal by crossing downward from the overbought. So all these other indicators can serve as extra confirmation, guys, extra confirmation. So guys, this is basically it about the RSI settings. You can always tweak your settings to enhance your strategy. Don't forget that in a ranging market, you can consider the 40 for the sold and the 60 for the overbought. In a strong trending market, you can consider 80 for overbought and 20 for oversold. But in a just normal trending markets, you can just use the default settings of 70-30 and the default 14 in a just normal trending market. But if you are a short-term trader, you might want to change. I'm just doing a brief recap. If you're a short-term trader, you might just want to change the period to 7 or 9. That is the period. You might want to change the period to 7 or 9. Don't forget if you're a short-term trader. But if you are a medium-term trader, you might want to just leave the default 14. If you are a long-term trader, you might want to change this to 21 or 28, between 21 to 28, right? So that is it, guys. That is it. You can use this to enhance your trading strategy with the RSI. I believe that by now you would have already known how to tweak the RSI indicator to suit your own trading, right? I hope you found this video insightful. Please kindly like, subscribe, and share to those who you feel are going to find this video also insightful. Don't forget to click on the notification bell so you can get updated on further trading insights on my subsequent videos. So guys, cheers and happy trading.